Yo, what's good? It's AM Trades, and today we have a trade recap for the 26th of April 2024. So we took two trades today, both on the NASDAQ, and we ended up winning both trades. One was a break even stop, and the other was I think, 1.5 hour combined after partials and everything. So hold on here, if this is going to load. So we started on the hourly today. Let's just get rid of that. Started on the hourly, we could see that we had an SMT here as well as a daily SMT of these highs compared to the S&P 500 here. Right over. Oh, sorry, that's Nasdaq. Yeah, so we didn't sweep the this previous week like daily highs, and this is also a daily for value gap that went unmitigated. And then we also had the opposite happened on the S&P 500. So we did come and sweep liquidity here and then filled this daily for value gap. So I was looking for moves to the downside during the day for both instruments. We ended up taking longs, but I'll explain why that's the case. So my ultimate drawn liquidity ended up being these highs because I knew that before we see a continuation to the downside on the daily, as we are probably going to see because market sentiment has shifted bearish in the last couple of weeks, we had this daily order block as well as this daily for value gap. I wanted to see us reach into this and then reject, but since it was Friday, market was likely going to leave this for Monday or Tuesday, right? Because especially we have a lot of news next week, so I expect Monday we're going to come up and take these daily highs and then mitigate that for value gap. But regardless, that's where my draw was for Friday. And then if we move down onto the hourly, we can see that we did have these SMTs. And if you peep this 1 hour for value gap here, the Nasdaq mitigated it a lot heavier than the S&P 500 did. So we got like almost probably 0.38 fib fill on that for value gap. But here we definitely at least got a 50%, maybe even a golden pocket retrace. So I was looking for buys off of this just because I wanted to see the reaction off of this into this daily for value gap, right? And so once we had our bias like that, we don't go on the S&P anymore. We just scale down on the NASDAQ. So now we're on the 15-minute. We can see we have these two equal highs forming bearish SMT. The bearish SMT delivers into this mitigation of the value gap at market open. And then we can see that we leave behind this 15-minute for value gap. Yeah, a tiny one here. And then now we're looking for buys. We also had consumer sentiment at April 26th. Consumer sentiment at 10 o'clock, so I wasn't looking for a trade before 10. I actually ended up making a mistake. I forgot about consumer sentiment and got into shorts, like right, where was it? I think it was right here. Yeah, I think it was right around here somewhere. I got into shorts, but I exited them, and that was with this losses here, the minus 150, but that's whatever. So I'm happy I got out at break even because we ended up actually having a green day. But what I was saying is we had that consumer sentiment, so I wasn't looking for anything until we saw 10 a.m. hit and for the news candle to form. So consumer sentiment came out, I think, slightly bullish. Yeah, slightly bullish for the indices. Remember, if it's red, then it's going to go up for the indices, down for DXY, and if it's green, it's going to be the opposite. So on the indices, we were looking for buys. So we go on the 5-minute and then we scale down to the 1-minute, right around our macro of 950 to 1010, where we're going to see a aggressive move into a fair value gap or to sweep liquidity. We saw this move into this 1 minute for value, 1 minute order block here, and then I entered off of. Hold on, let me find it here. I entered off of the 0.618 level of, I believe it was this range. If we take the bottom here all the way to the top, from here to here. Yeah, I think that's what it was. Oh, no, I ended off equilibrium. So we had equilibrium here in line with this 1 minute for value gap. That's where I entered. So I got filled here. We came into a little bit of drawdown as price seeked this 5-minute order block. If we scale out a little bit. Oh, maybe it's a 3-minute order block. Yeah, came and like tapped perfectly into this 3-minute order block, and then we saw a nice reaction to the upside, some nice displacement. So I was letting that trade run. This is my first take profit level. It was the high of the first SMT, right? So the one all the way over there. I know price isn't going to load. My Wi-Fi is kind of terrible. But yeah, so we saw that move up. We took 50% of our position at this high, okay? And that was, I think, 1R total. And so as soon as we hit TP1, we always set our stops to break even so that we have no more risk in the market. And so now moving forward, we saw this reaction to the downside. Of course, I don't care because I have no risk on the table. I've already made money, and anything past that is extra money. It's like gravy, right? So I was looking, and right around this lunch hour macro 11:50 to 12:10, I saw that we were setting up again for a nice move upwards, and I was kind of on the charts right now, and I was I think I was sitting in chemistry, and I saw this looks like a really nice setup, right? So we had all of this kind of pending orders and consolidation, and we had this for value gap. We also saw a retrace from here to here. I entered off of equilibrium of the range right here, as you can see. Equilibrium off the range in line with, equilibrium of the range in line with a 1 minute for value gap right here. So I entered off of this. We got in there, and then we saw a move down. We were about, this is about $1,000 in drawdown, but we don't close yet, right? Because our trade idea hasn't been invalidated. We haven't hit our stop loss. So we're just holding. This is all throughout lunch. It's just very, very choppy. And then we see our move to the upside. I'm not taking profits at this level because my risk to reward was not that good as it was with this one because we got the entry lower. And so what I was planning on doing is this yellow line. As soon as price hit this yellow line, I was just going to set the stops to this second position to break even. And then I was going to take all the positions at this level, right? So then we saw chop around. Of course, it's Friday, and PM session on Friday is usually just like barely any volume. As you can see, we didn't really see any kind of decisive move up or down. So we see that move up, and then we retrace down. We tap our break-even stop, and then whenever I have a second position, my break-even stop applies for both the first and the second position. So I'm always going to win profit, even if I'm break-even on the second, right? And so that netted me another, I think, 0.5 R, right, including the break even. So we ended with a total of 1.5 R on the day, and then the trades were actually only about that long. Yeah. So we held that, and then we were targeting, I think it was Tuesday's high or Friday from last week's high of day before this daily for value gap. But definitely we are going to see, we're going to see this get hit next week, 100%, because we're not going to continue bearish until that gets balanced out. Regardless, looking into next week, we have no news Monday, so I'm probably not going to be trading Monday. Tuesday, we have consumer. This is a good day. There's going to be a lot of volatility in the markets, and we're not trading until 10 a.m. at least to wait for consumer confidence. And then Wednesday, May 1st. Oh man, it's already the 5th month of the year. That's kind of crazy. We have a whole bunch of news, so I'm definitely going to be trading, but I'm not going to be holding anything past 2 p.m. because Powell is going to be, well, not Powell, but FOMC is going to be happening, and that means that there's going to be kind of erratic movements, right, as the Fed discusses kind of the economic climate of the U.S. And then if we look here, Thursday, unemployment claims, definitely going to be trading that. This is an hour before market open, so we're good with our regular 950 to 1010 range. And then Friday, we have another very nice high volatility news day, and we will not be trading until minimum 10 o'clock. So next week is going to be great. We got to finish getting this account passed. We made $3,062. This is a $200,000 funded X account. And that's how we made 1.5 R, right? So 1.5 times our initial risk of $2,000 is 3,000, right? So with that being said, not a bad day. Yeah, we took money out of the markets and we stayed consistent with our rules and stayed disciplined, stayed unemotional. And that's all that I got for today. See you guys tomorrow. Bye-bye.